The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 16th wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everybody out there had a terrific Tuesday. Let's make sure we do all that we can do to have a wonderful Wednesday, and welcome to all our new listeners here, and thanks for checking in. Thanks for checking in this morning to the Hotel California. That means once you check in, you'll never check out. This is Tiger Financial News Network. We've got 9 hours of live programming each and every day. You've got me for the next couple of hours here, and I'll do everything that I can to teach about the technical tools for trading patterns like A to B equals CD patterns. We'll look at those lightning bolts, see if there's any lightning bolts that we need to be concerned with. We'll take a look at Fibonacci expansions and retracements. We use those tools as measurements, kind of floors as to where price will gravitate to. We'll look at the candlesticks. We'll look at signals to see, because the signals that the bulls and bears, they've got to check in for work each and every day, and they provide us with signs as to what the markets are doing. They help us to identify reversal areas, support and resistance, and this is a call-in talk show. That means you get to give us a call here at 877-927-6648. I'm happy to take your call. Take a look at your stock chart. We'll look at it in great detail, look at the time frame that you are trading on, and then we'll look maybe up one level and down a level just to understand what really is going on, what the buyers and sellers are doing with your trade. Well, folks, let's get this morning kicked off here. Right now, we've got the Dow futures. They're up 61 points. S&P up 8, trading out at 1976. NASDAQ futures up 25. They're trading at 39.38. Russell 2000 up about 5 points, trading at 11.57. King Dollar on the move this morning. She's up 174 ticks, trading out at $80.62. Goldilocks up a couple bucks, trading at $12.99. Silver down 9 pennies. She's trading out at $20.79. Light sweet crude having a bit of a bounce here this morning, up 57 cents. It's trading out at 100.53. A quick peek across the globe out here. What we're going to find is over in Germany, the DAX is up 144 points. So a little celebratory mood, up 1.5% as we speak right now. The FTSE also up over 1%. That's trading out at 67.89, up about 80 points. The Nikkei off 15 last night, really kind of an unchanged market out there, down 0.1%. No big deal. Hang Seng up 63 points. That's up 0.25%. And the Shanghai was down 3. That's down about 0.1%. So where do we begin our day? Let's begin our day. You know, we've got a what's called the Tiger's Den here. So for all of you that are new to TFNN, one of the things that we have is a trading room here at TFNN. You can check that out by going to the homepage of TFNN.com. You can test drive that for 30 days. And what you'll see inside the Tiger's Den is a peer group of traders that provide all kinds of great information. You'll be able to see each of our host charts in HD. So that's a positive as well, and you can test that out for 30 days. And KZ in the den, he said, he or she, I don't know if it's he or she, let's just say KZ said the Euro-Japanese yen is down and the market is way up. And I say that is an excellent point, isn't it? So let's go take a look at what KZ is looking at, because I believe we need to look at it too. So let's go look at it on a couple different time frame out here. Let's take a look at the Euro-Japanese yen on a 30-minute chart. So here's a 30-minute chart of this currency pair. Number one, if you take a look at the highlighted, colored-in area, that is a Gartley sell pattern. That Gartley sell pattern formed here at 3:30 in the morning. That was on July the 14th. Now, it formed with a wide-ranging bar. What does that carry with it? It carries with it a message that price really should have moved up to the 0.786 retracement level. If I go from the high to the low, you'll see that the 0.786 retracement level was 138.48. It got up to 138.36. That was on the 11 o'clock session on July 14th. Well, let's call that a completed pattern out there. It wasn't with a great, looks like a little expansion was also taking place at the time. Let's just take a look at that Fibonacci expansion out there. Yeah, 1.272 expansion of that short swing point. Look, the Gartley sell pattern still in effect out here. And where it had been traveling in a sideways move, and that sideways move really being in between the breakout area. Where's my crosshair out here. Let me get my big crosshair. Big crosshair. There we go. And that's really where this thing had broken out. This currency pair broke out about 3 o'clock in the morning on July 14th. We can see is that breakout is not held. So what does that set up? Well, if we take a look at lightning bolt patterns, A to B equals CD to the downside. We just start with a swing point high from 4:30 in the morning on July 15th down to a low out here at 12:30 in the morning, 12:30 in the afternoon, I should say, on July 15th. That was getting down to a price level of 137.87. Makes a very shallow retracement. Retracement-wise, that makes a retracement of 0.382, almost Johnny on the spot out there. So what does that set up? Well, you're going to see a 1-to-1 A to B equals CD that takes you to 137.57. But with that kind of shallow retracement, what it really suggests is more likely move down to 137.40. Now, what we also, if you just kind of look here closely, let me draw a line across the bottom of the chart out here. We're going to do this for KZ. We're going to identify an area of support. So on the 30-minute chart, there's already been even though we've got an A to B equals CD pattern to the downside, the bulls are out. The bulls came out in full force here at about 6 o'clock this morning. They created this little hammer candle. Now what we can see here is as we came on the air at 9 o'clock, that hammer candle, the low of that was tested. If you see it close below that session, which, by the way, that is at 137.62. If you're long, you're wrong. That's the expression when we take a look at hammer candles. What does that mean? What that means is that we will see the euro-Japanese yen go down and at least complete the 1-to-1. I say it more likely will do more than a 1-to-1 A to B equals CD. But first you got to get past the bulls. We know the area where they are defending. Now, that's on the intraday chart. And so KZ is exactly right. We see futures are up this morning, and this currency pair is down. That's got to make you say, it's got to make me say, something to think about. Why is that? Because of the correlation that it has to the U.S. stock market. And when these patterns get uncorrelated, it's the currency pair that wins the battle out here. Let's switch over. Let's take a quick peek at the daily chart. And as we take a look at the daily chart, this is the one we want to be most interested in. Here's the one where we've got the 0.786 Gartley buy pattern. That's the yellow shaded pattern. Beautiful Fibonacci numbers. It doesn't get too much better than this. A 0.786 retracement, a 1.618 expansion of a set of swing points. And that low has been tested now. This is our 1, 2, 3, 4, 5 times down to this level here. So price is really trying to take this out. If it does take this out, it says price will, number one, or should fall down to the rising price channel out here. And that's the rising price channel that takes you all the way back to the time frame of July of 2012. So what does this all mean to you? Look, unless this has totally decoupled, the currency pair paves the way with regard to for the direction, for the eventual direction of the markets out here. From a real bullish standpoint, what the bulls need to see and is for the bulls to defend this territory inside this currency pair. Can this divergence go on for a while? It can. And that's the only problem, KZ, is you can't use this currency pair necessarily as a timing tool, per se, as to when the market might turn out there. But it says that one of the biggest fuels of the marketplace here is saying, I don't think so. Doesn't mean that the correlation goes away out here, but at this stage, we don't have enough evidence to say that correlation has gone away at all. What else are we going to take a look at? What else are we going to focus on certainly during the day? We got to go take a look at what's going on inside that VIX index. Now, without the market opening, I suspect we'll see the VIX index pop to the downside. From a bullish standpoint, what the VIX did yesterday was it was able to defend its 50-day exponential moving average. That's the red line going across my chart out here. Right now, today, it's priced out at 12.05. It closed yesterday at 11.96 out there, so price trying to get above that. When price gets above it, if you take a look at those yellow painted sections on my chart, price inside the stock market here goes to the downside. Likewise, if this area holds, the market will either move sideways to higher. Okay, so we've got that. So the market is moving right now higher, no question about it. We've got Germany's up, the DAX is up, the FTSE is up. You've got our futures are up 60 points. So let's go take a look and see what does that mean. Let's go take a look at the daily charts here. Let's begin by taking a look at the daily charts. We'll start off with the Dow. The Dow has been super strong out here. If you're watching us on TigerTV, these are the Rhodes Momentum Indicator charts out here. You'll see some green boxes and red boxes. They have significant meaning for us. Right now you can see in this session here today, it's forming another little red box. That tells you in a super strong bullish market out here. But here's the potential problem. I say only potential problem because we don't have any kind of reversal signal here today. Yesterday was no reversal signal. If I go ahead and I blow this up, it was what's referred to as a high wave candle. Looks like a doji, smells like a doji, but just misses it by just a hair out there. And the two have different meanings because a doji candle at resistance is resistance. A high wave candle just says the market is confused. And at this stage here, of course, this is a daily chart, so we won't know until the day's end how that confusion is going to resolve itself. What we do know is the Dow is moving higher. It's doing it on less relative strength. That less relative strength is coming back and measuring back to the June 10th area on the daily chart for the Dow futures out here. No reversal here just yet. This can be resolved by continuing to move higher. When we get back, let's go look at those consolidating patterns again. Let's go see what kind of price projections might be in store to the upside as well as to the downside. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 62, S&P up 8, NASDAQ up 24 as we speak right now. Moving to the upside, we've got Time Warner leading the charge dollar-wise to the upside, closing out at $71, trading out at 82 on a buyout offer out there that has been refused at this stage. Apple to the upside this morning. That's trading out at $97.12. It closed at $95.32 yesterday. GoPro. Recent IPO, it closed at $41.63. It's traded out at $43.49. Intel out with numbers after the bell last night, closing at $31.71. It's trading at $33.43. International Gaming Technology, it closed at $15.50, trading out at $16.95. I know there's some investigation as to what the insiders were doing when the recent buyout had been mentioned. Nonetheless, it is trading to the upside. CBS Corp, that's traded out at $60.95. It's closed at $59.50. To the downside here, we've got Yahoo. It closed at $35.61. She's traded out at $34.46. Taiwan Semiconductor, TSM, is the ticker symbol, closing at $22.47, trading right now at $21.60. BlackBerry on news that IBM, how about that? News that IBM and Apple have consummated a marriage out there, a little partnership, and BlackBerry trading off. It's trading at $10.79 after closing at $11.70. So before I went to that last break, I said, let's go take a look at some consolidation patterns. Let's take a look at what they're doing here to the upside. Let's take a look at the NASDAQ futures. Let's take a look at the little engine that certainly came off of its lows back here. The low of the consolidation pattern most recently was back on April the 15th. And what that had done was what we were looking at on my screen is a 300-point consolidation. The bottom of that consolidation is in the 3,400 level. The top of the consolidation is in the 3,700 level, 3,750, you could call it. So we take 3,750, take 3,700, 3,750, and you add 300 points to it. You're going to get, 4,150? I've got marked here 4,100. 37 and 3, 4,050. What the heck am I talking about? I'm going to have to go back here and redo my mathematic works here. So much for being a bean counter. Yeah, so about 4,050, 4,040 out here. Now, and that's a price prediction. When you break a consolidation, what typically happens is you do a measured move equal to or greater than the consolidation pattern out here. And at this stage, what we know is the NASDAQ is trading out at 39.37, maybe running into a little bit of resistance out here, a Fibonacci expansion of its last set of swing points. That's from the high of July 3rd down to the low of July 10th. That expansion, 39.42 is what we'll call it. What we've seen here is trade up to as high as 39.40 so far this morning. Inside the NASDAQ as well, if we take a look at what it's doing, it's moving higher on less relative strength. No reversal signal, with the exception of yesterday. And if I take a look at yesterday, let me blow this up on the chart out here. You won't notice it as a reversal signal, except it was a key reversal session. Key reversal session coming from an extended period of time. It would mean a lower close today would be a sign of a potential retracement out here. If it takes that out, well, so much for the key reversal session out here. Nonetheless, we've got price moving higher, doing it on less relative strength. But, if you take a look at all different moving averages out here, they are all in a bullish mode. That is inside of the NASDAQ futures contract. If I go take a look at what's going on a shorter-term time frame, let's go do that, right? Let's go up a level, down a level, see what we have going on here. Let's go take a look at the really going down a level, I believe. Let's go to a 30-minute chart out here for the NASDAQ. In fact, I want to do we'll do the NASDAQ. Then I'll come back to the Dow out here. where is it? If we take a look at the NASDAQ on a 30-minute chart, I don't see anything bearish out here other than the fact that take a look at how this has extended itself. If you're looking at not the very bottom is volume, but if you take a look at one up from the bottom here, you've got the 14-period relative strength indicator, and you can see it's up towards extended territory where you usually see this either move sideways or pull back. The actual level here as we were coming in at about 8:30 this morning, right around 81.36 out here. So it is extended in quite a way. But what I want to do here is come back and take a look at the Dow, because I think this is likely what we're going to see here take place, at least in the morning session. Then we'll see if it's a pop and a drop. And if we take a look at the timing, that timing really being 10:30. So we got about an hour for this pattern to potentially complete. Now, this happens to be one of Larry Pesavento's or H.M. Gartley's 1-3-5 pattern out here, this expanding cone. But just take a look at it. It's also a 3-drive to a pattern. If you take a look at that first drive out here, 10 o'clock in the morning on July 14th, the second drive taking place at 10 in the morning on July 15th. The third drive could take place at 10:30 this morning, with price moving up to about 17.074. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 74 points, trading out at 17,135. S&P up 10 at 1983. NASDAQ Composite up 28 points at 44.44. Russell 2000 up 6, trading out at 11.59. NDX 100 up 26 points. New York Stock Exchange up 56. Gold up $3. Silver back 6 pennies out here. And to the upside, you've got Time Warner, Viacom. Time Warner up $11, Viacom up 5, Universal Health Systems up $4, Discovery Communications up 4, Netflix up a couple bucks, Zip Realty up $3.68, HCA Holdings up $3.41, IBM up $2.60, Western Digital up $2.70 to the downside. PNC Financial, wonder if they were out with earnings here before the bell. They were. Looks like their second quarter profit had dropped. Revenue of $3.8 billion versus $3.78, so they beat the top line. Net income $1 billion, 1.05 versus 1.11. Nonetheless, it's trading to the downside, off about 3.5%, down $3 and change. Asimal Holdings, ASML Holdings, ASML is a ticker symbol, off 3%, down 270. BioAmber, BIOA, off about 16%, down 230 this morning. Shire PLC down $1.64. Yahoo off $1.49. Hershey's is off. Hey, that's a blasphemy out there. Hershey's is down $2, down a little over 2%. Okay, let's go back here real quickly. We got all the time we want here, right? We've got another hour and 25 minutes, so we don't have to be too quick about it. But as we were going into break, I was taking a look at the Dow futures. Now, this is a pattern here that I had drawn earlier this morning. We'll see if this comes to fruition. This could be forming a 3-drive to a top pattern. This is a 30-minute chart for the Dow futures. Now, the price objective of this pattern takes right around 17,075. Let's actually get the exact number out here. Not that these patterns need to go ahead and trade to the T. What I'm looking at is a 1.272 expansion. That 1.272, 17,076 out there. That would be the exact number. Now, that doesn't mean just because price gets there, this pattern would be in play out here. But it's what we want to pay attention to. It's a 30-minute chart out here. If this pattern does play out, we'll see it play out during our, we should see it play out during our couple hours on the radio with you. If it does play out, we'll see price get up here between now and 10:30, so in the next 40 some odd 50 minutes out here, and then we'll see some type of reversal candle. Now, it could take place even right now, since we've seen a high out here of 17,049. So 17,049 to 17,076. We're really inside of that range out here. So this is something that we want to be paying attention to. Now, it's a much shorter term time frame chart. What does it suggest if we see an actual reversal take place here? Well, the first place that it suggests is that we see price move all the way back down to the swing point here in the Dow futures. That would take it down to about the 16,932 level. And then that's if this pattern plays out. And then we deal with it as price would be pulling back into that level. So you do have a pattern out here. You do have a potential reversal pattern. It's nice because we can draw these. These are leading indicators. We can draw these in advance. As long as I'm in my Ensign Windows charting tool out here, I had a request from Don to take a look at UNG. It was an email request. He's looking to get into a long position. That is the ETF for natural gas. So let's go take a look at the natural gas contract. We'll take a look at the at both the continuous contract, and we'll take a look at I don't know which contract he's not trading a contract out here. I don't know which one, or if it's multiple contracts inside the UNG. That I don't know. So you want to make sure that you understand which contracts the ETF is contending with. And at this stage here, we'll just go take, I think the active contract out here is, I believe it's September. So we'll take a look at the September contract. But here's the continuous. The continuous contract out here, what I do want to show you, I want to show Don, is that the natural gas really came off of the lows back here in April 2012. Came off nicely. It's been in a nice rising price channel using the continuous contract. And what we can see here is we can see that price broke through this on July the 10th out here. So it broke through it, came back up and tested it on the trading session of July 14th and rejected that area. Now let's actually go look at the active contract and see what Don might be looking at, because I don't know the time frame of the trade out here. We can see that on the September contract, natural gas trading out at $4.13. What you would need to see here now, we can also see, is that prices made a 0.618 retracement level. That's coming from the low out here, its most recent low, November 5th, 2013, down about $3.58, all the way to the high, little key reversal session, by the way, that was put in on June the 16th, as price got up to $4.87 out here. So it has made a 0.618 retracement. Oftentimes, these are areas where traders will go ahead and take trades off if you were short. Maybe go ahead and put trades on if you're looking to be long. Now, if that's the case here, Don, what you most certainly want to see, because price is certainly in the oversold condition, using our 14-period relative strength indicator out there, what you want to do is you want to get some type of bullish reversal signal at a minimum, because otherwise price is just working off an oversold condition out here. Today you can see a bullish engulfing on the September contract if you actually see a price above 416 we'll call it. You're at 413 right now. You'd like to see ideally some kind of sign of strength out here. If you did take a long position out here, one, go into the UNG, find out which contract or contracts are inside of that, and then pay attention to the stock chart. And what I would say is you're probably looking for a bounce up into about the $4.38 area as a initial target for the UNG. If I go put the UNG up on my screen out here, let's do that. Let me see if I've got that. Yeah, let's go take a look at and let's look at the UNG on using a couple of different tools out here. Now, do not worry about the gaps that are inside here. The gaps reflect trading activity that has taken place, because UNG is only traded in essence between 9:30 and 4 o'clock in the afternoon. So the gaps on this chart are basically meaningless. So don't be paying any attention to the gaps out here. What I wanted to see on the UNG, if there were any larger patterns. Let me put this on a weekly time frame out here. Let me do that. See what we can see. Not a lot, at least that sticks out to me, other than this key reversal session that it too had on the trading session of February the 28th. So on the UNG specifically, if you're just going to trade this and ignore the contracts, which is not something that I recommend that you do, this would tell us that price ought to pull back inside the UNG on a weekly basis. It's trading inside this breakout candle right around the $21.10 area. That would more likely be the spot that you would be taking a look at. That's on a weekly time frame. On the daily time frame, let's go see, that was 21.10. We're going to see really the same kind of a thing out here, although in this case we can put together multiple retracement levels. So let's do that for Don out here. So you've got 2110, 2112 as one area. Let's take a look, see if we can find some confluence out here. A couple of retracement levels coming together at the same place. So you've got a 0.786 retracement level at 2127. So Don, I'd have to say 2112, 2127 would be your target entry area. And inside the UNG, that probably sets up also an A to B equals CD. To the downside, that probably sets up a Gartley pattern. Let's look at the A to B equals CD to the downside first. Your A point is the high here on February 24th. Your B point is the low on March 25th, and your C point out here on April the 30th. It's made the one-to-one A to B equals CD to the downside, but I would say you're better off waiting for that Gartley pattern to come in, at least until you see some other reversal signal, some other sign of strength. I would say, Don, wait until you're getting into that, what did I say, about 2110 or so area. that's what I would be. That's really what I'd be looking at. So that was for Don in Odessa. He is taking a look at UNG. Now I did. Let's do one more thing for Don out here. He was good enough to send me an email. Let's go take a look at the market profiles for UNG. So let's go see what those show us. Let's take a look at the daily, weekly market profiles for this. And we can see that a new market profile has formed out here. That new market profile inside the UNG says that support ought to be at about the this level right here, 2273. You're trading at 2278. It closed below that today. That would say that still in a bearish mode out here. Let me take a look at a weekly time frame. Get a larger look-see inside of the United Natural Gas ETF for us. And the weekly chart says, hey, you're in bearish mode here because you're below its market profile. So expect 2403 on any kind of a bounce to be a resistance area. Getting back up above that, that would be bullish to neutral. Let's go see what we've got going on in the markets as far as what is moving here this morning. Let's take a look at what do we got large-wise out here? Well, actually, let's do this. I don't see them on my screen. I want to take a look at Intel, and so I'm going to switch back over here. I want to take a look at Intel and Yahoo, INTC, YHOO. Let's take a look at Intel specifically. Up $1.94 right now, trading out at 33.66. Let's take a look at its daily chart. Weekly looks pretty darn bullish to me. Let's take a look at its daily chart, try to figure out what it is doing. So you've got you got a second gap up here this morning. Just looking to see if there was a third gap on the chart, and I don't see that out here. If we take a look at, let me get some more data out here. I don't know if do I have a years? Let me get, see if I can get 2 years worth of data. Days, what do I need? I need about 775 days of data out here. Let me hit OK. Hit OK. I said hit OK. Hit OK. Come on, baby. All right, there we go. If I take a look at Yahoo, boy, this thing has gotten into extreme overbought territory. I mean, a strong relative strength reading right now this morning, $89.27 out here. Let's take a look at a shorter-term A to B equals CD pattern coming off of the lows back here, February the 5th. Those lows here inside Intel being 2350, your B point on this, being the swing high, this little doji candle, April the 16th, a retracement down into the May 19th area. This is already done a 1 to 2 A to B equals CD to the upside. So this thing is major extended out here. Nothing bearish about the pattern. The only thing that would be bearish would be to wake up tomorrow and see this thing gap down, forming a island reversal top. Let me take a look here at a monthly chart, see what kind of what we're also looking at. So you've got Intel making it all the way back, making a 100% move of a move, taking it back to a swing point back in 2004, January of 2004. So getting above that swing point, which is, by the way, 34.60, even the monthly chart is in the extreme over bought condition out here. So it really ought to run into resistance. It says that the move to the upside in Intel could be running into significant pressure out here. 34.60 is the number. Now, if it can get above 34.60, well, it's got another swing point to contend with, which takes you back into 2002. How about that? Takes you all the way back to a price level of about 36.78. So 36.78 to 34.60 is likely where Intel begins to really run out of steam. Let's go take a look at Yahoo. Let's go see what Yahoo is doing here this morning. Yahoo down $1.43. Here's the monthly chart. Let's go switch down and take a look at a daily chart, get a better feel for what is going on there. As we take a look at Yahoo, gapping down this morning, volume behind the move. So far, 10 million shares. Let's see, where do we have some volume inside of Yahoo? This thing has really been consolidating here since April the 15th. The consolidation pattern, the lows about the 33.10, the highs up here right around the $37. So you've got a 4-point consolidation. That says if Yahoo breaks below $33, it probably runs to $29 to the downside. That's the if. There's also a 33.24 happens to be a support level. You got quite a few support levels here. The unfair lows, their market profiles. But let's just use the swing point on the daily chart of April the 11th, 28 million shares to the downside. If Yahoo takes that out, in fact, it probably already had a 1-to-1 A to B equals CD. Let's see if that's the case. That's the high out here from January 8th, the low down here from about the January 30th, and then a C retracement that was up on March the 5th. Yeah, it makes a 1-to-1 A to B equals CD to the downside. So that pattern, in essence, has completed, right? Yes. And so now we're just going to deal with this little consolidation box that it is traveling in. So I say if it breaks to the downside, you've got about a $29 price projection. If it breaks to the upside, you've got about a 4-point move. So that says you move up to about the $41 area and get back up to the swing point high from January. Do I see any significant volume around the $29 area? I do. That takes you back to the trading session of July 17, 2013. The high of that session, 29.73, volume of 83 million shares. So a break of the consolidation, expect Yahoo to run into some support either at the high or it could also be at the low, 27.52. That is YHOO is your ticker symbol. Right now, we've got the Dow's up 48, S&P is up 7, NASDAQ Composite up 26 points out here. We'll go back on a just different stock chart. I'll do that during the break. I'll go back and check in on that 3 drive to a top pattern out there. 877-927-6648. Steve Rhodes, TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now we've got the Dow is up 40, S&P is up 6, NASDAQ Composite up 23, Russell 2000 struggling again, down $1.50 right now. So let's go back. As we started the morning out, we were taking a look at one of our leading indicator patterns that was 3 drive to a top pattern on the 30-minute chart out here, and really you'd have to say it worked itself to a T as we speak right now. So it hit the target area, got up to 17,069. I think it was 17,076. So that's pretty darn good, right? So it has hit that area. We've gotten a reversal signal right now. This is a 3-candle reversal signal known as an evening star. Now this pattern here will complete in about a little over 4 minutes out here. So long as we see a close, well, certainly if you see a close below 17,042. That would then suggest at a minimum inside the Dow, that you would see a retracement, right? And those retracement levels being back to the 17,017 area. Well, you've already hit down the low at 17,027. So you'd almost say that first retracement level has been hit. Of course, we've got 4 minutes left, so anything can happen during this 4-minute session. If you do see that reversal signal continue to maintain itself, 16,894, 16,961. But the real key is going to be bullish, bearish, is going to be what happens if, in fact, price pulls back and it breaks that low from 12:30 this morning at 16,932 out there. That's not exactly what you wanted to see from a bullish standpoint, but as we know, when we also began the show, we were looking at the Euro-Japanese yen. So let's go peek in on that and see what that currency pair is doing out here. Actually, I can take a look at it inside. This is going to be the intraday chart. So let's go take a look at the intraday chart for that currency pair as well. Here's the 30-minute chart. That continues to push lower. Now, what it has done, it's completed its 1-to-1 A to B equals CD pattern to the downside at 137.54. No reversal signal yet in that we can see in place out here. Also, as long as we're in the intraday chart, Steve, you might as well just stay here and take a look at it. You can see a couple of different things out here. These are great tools to use in your trading. We take a look at this little trend line. That's the blue diagonal line up on my screen right now. You can see that price had broken through that with some conviction yesterday at 11 o'clock in the morning. And all price has done so far is tried to get back inside that trend, and it continues to be rejected. Getting back above that would be a bullish message for sure. If you go back and we go back, you go back, we go back, I go back, take a look at the Russell 2000, see what it is doing. Here's a little trend line inside the Russell. This is just the 30-minute contract for it, just coming off of the 7 a.m. July 7th high out there at about 12:01.40. I'm using that as a touch point, and then I'm using inside the Russell 2000, I'm using the touch point here at 9:30 in the morning. That was 2 days ago on July the 14th. You can also see that yesterday at 10:30 in the morning, when we saw a little bit, 10 o'clock in the morning, I should say, during that 30-minute session, a little punch higher, that trend held. Look, if the Russell 2000 changes its trend, and the 30-minute chart here is one of the places that I would be looking for to see if it can bust through this trend, which it did not. Price moved right up into it at 9 o'clock this morning, and that held. If we do see a change in trend here in the Russell 2000, then it may decide to go ahead and take up the rear, so to speak, inside the market, because that has been the weak link. So we do want to be paying attention to the weak links out here. So as we go off the air during this break, we've got the Dow's up 46, S&P is up 7. Volatility index well below that 50-day exponential moving average. She's priced out at 1144. The key number to be watching there is about the 1205 area. So, folks, it is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and thanks so much for joining us this morning. Have yourself a great trading day. Stay tuned. The Money Master Show is up next. We'll be with you for another full hour. Take care.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.